An exclusive excerpt of a conversation with Nirmal Jain, the founder of IIFL, with his take on market valuations and the recovery.
The valuations are steep in cases where the stocks are very well known and very well discovered, and there is a reasonable certainty about earnings, or there's a safety. So there's a huge liquidity which is chasing Indian stocks and the foreign money that wants to get invested in India on one hand. And at the same time, most of the investors are very cautious and they want to be with ultra-safe names. That is one. But secondly, I think the reason why this is happening is, we did a study on this, ETF money, which is the passive money, has become very large. So, to take an illustration, no fund manager may take a call to, say, invest in State Bank of India for that matter, and still $10 billion of money may get invested in State Bank of India. Now, so how does this happen? I'm not saying, I'm just taking State Bank of India as an example, not that, or any stock for that matter, any say, a stock X. Because if it's a large stock and is part of big indices, so the money gets invested in those indices and gets pro rata allocated, to all those stocks regardless of what the valuations are. So supposing somebody sitting in a foreign country finds, no value in, say, HDFC Bank or Kotak Bank, but he goes and invests in India index, and those will get invested in large names, which will include HDFC and Kotak for that matter. So that is one phenomena that is impacting the flow of valuations, because there's money which is chasing India, and people are not comfortable with certain valuations of larger stocks. Having said that, there is some active money also, which basically, despite high valuations, they are convinced about growth potential, and they are convinced about India's story, and they are willing to take the risk that, okay, if earnings momentum continues, I may be paying a higher price now, but if I hold it long enough, then valuations will correct automatically because earnings will catch up. So, that is the second school of thought or theme that works. And other than that, I think, as markets, as the rally sustains for a longer time, it will broaden, and, investors will start looking at stocks beyond top 10 names also.
Nirmal, what is the mood of foreign investors, the ones which are attending the conference, or even the ones, some of your partners you are interacting with periodically, regarding India, especially with a lot of negative headlines on the macro front? The data shows that they've been increasing stakes in, say, top 100, 150 companies consistently, even through the correction last couple of months. And this is the fifth or sixth straight month of net buying from the FI community. In the face of this kind of a data, what's the mood check or the sentiment check which you are gathering from your conference or your interactions with the FI community of fund managers?
Now, mood, if I can summarize in 2 words, I mean, of course, the pun intended, is finding alpha. So everybody has money, and there's a lot of liquidity, global liquidity, which can get into India. And only thing is that they're trying to find alpha, and they're trying to find stocks that will outperform the benchmark indices, so that as a fund manager, they can perform well.
So are you saying that the probability is quite high from here on that the incremental money will actually start flowing towards the broader end of the market, where quality stocks offer chance on valuations and the earnings trajectory is good? But till now, for some reason or the other, for the last 1.5 years or so, it was also avoided with the rest of the broader market.
It's a little difficult question to answer, because there are different pools of money. So as I said, there's a passive money. They will get invested in the stock indices, where larger stocks will get higher proportion of it. And the passive money can also come into different types of indices, which can be a broader index or a narrow index and things like that. So one is the passive money, which I think a larger component of that will go to large stocks still. So it's very difficult to figure out that when foreign investors, how much money will they put in passive indices tracking India, or active funds investing in India. And then there's a pool of money which actively seeks ideas and alpha. That's where you'll see that they try and look for stocks beyond top 10 or 12 names, and look at long-term, creating value and alpha for their investors. So there's both pool of money, and I think you just can't say that the larger caps will start underperforming or outperforming. But of course, you'll see a lot of traction in names beyond top 10, 12 in this year, in 2020.
Nirmal, let's shift focus and talk a little bit about macro and how market is looking from the macro viewpoint. You've seen cycles been in the market for about 3 decades now. Where does Indian market lie right now in the face of either call it economic recovery, which one section of the market is calling, or economic doldrums? Do you think market is already factoring in a recovery which lies ahead and that's why running ahead? Or do you think slight positivity is getting built in before the actual numbers start improving? Where do you see that?
Right. So market has rallied primarily because for 2 reasons. One is liquidity has been there in the global system and the global economy and global financial markets. China is not able to absorb much capital now, given when the economy was slowing down even before the coronavirus, and now there are more concern about how long and how this will ultimately play out. 2, I think most investors, they have seen India just like you and me for last 30 years. They know that this is cyclical. Given India's strong demographics, it's just a matter of time that economy will bounce back. So they are long-term investors. And 3, regardless of the market, regardless of the economy, whenever a market is large, you'll always find values. You'll always find sectors and stocks that can do well, and sectors and stocks that are a little undervalued. So these are the factors that have been driving the market. Now, in terms of economic recovery, I'm personally very optimistic and very bullish that the economy will recover very soon, and it may surprise people in terms of how quickly the recovery can be. Most people today, many investors, many analysts are very cautious because they come out of a long, dark tunnel. In terms of, in Indian environment, even 1 year, 2 years becomes a long tunnel kind of a thing. And when you come out of a long, dark tunnel, it's very difficult for you to see the glimmer of light. But you look at few macro, the large variables. Ignore what government is doing. Everything else about demonetization or GST, keep them aside. Last 70 years, whenever crude oil prices have been low, monsoon has been good, Indian economy has done well, regardless of which government was in power. And I think with the China, whatever is happening in China, we'll see a slowdown in demand from China, and that will basically drive the commodity prices, particularly the crude oil prices, lower. India's advantage in this kind of environment is that India is a net importer of commodities, in particular crude, and also other commodities as well. So whenever commodity prices soften, then India benefits, and that is one factor. 2, if you look at the reports from various parts of the country, Rabi crop is very good, and touch wood, it will be, as harvesting will start soon, and you'll see that the rural demand will pick up with that. So these 2 are big factors from a macro point of view. 3, government has taken many steps. Whether we give credit to the government or not, because people look at the performance and say, they try to blame everything to the government or the policy makers. But I think they have taken a number of steps. So maybe you can say that they fired many arrows, and some of them may be strong ones, some of them may be weak ones. But one thing what people are missing out, there are all these policy measures and reforms that government does and the steps that they take, they will have an impact after a time lag. Because economy is not something where you touch it and overnight it will change. We are talking about 1 billion plus people, their sentiment and the way, and also the investment to generate returns. So these things do take some time, and I think one should be optimistic about it. Things will recover, and they'll recover very quickly.
All right, that's the view coming in from Nirmal Jain.